What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 16. It's June 28th, 2023. We made some trades today, so let's get into it. So let's start off. Let's talk about our key levels that we have on the chart today. So we start off at yesterday's closing price, which is up here, represented by this blue line, which is about 34,177. So let's start our analysis at the beginning of the session when the market opened at 9:30. So we initially established this zone in the pre-market, but once the market opened, we pretty much had a very strong sell-off. Now, after that sell-off, we established a consolidation area, and I look to use that as a reference point to take all of my trades going forward. So at trade one, I shorted the top of the zone, but I was too early right here. Now, this entire scenario where you have a big large down move right at the open followed by a consolidation period is one of my favorite setups actually. So let's go to our notes and let's just take a quick look at that so I can show you exactly what I was trying to aim for. So this right here is from May 19th this year. Notice we had the same thing happen. We had a strong sell-off at the open that led to a consolidation zone. Now, based on today's chart, I went short similar to this area that we see from May 19th. But notice how prices didn't necessarily stop directly at the top of the consolidation zone. They actually came back to retest the top of that wick. And that's actually kind of similar to what we saw today, because I took the trade from the top of the zone like I should have. But look at what happened. Prices came back to test that wick. So I think that's just a little small detail that I learned about this setup today, is that you don't necessarily always want to take it from the top of the zone just because it hit that level. Sometimes you want to see if it can go all the way back up to the top of that wick and hit it and then take that trade back down. So that's kind of what I was looking at today. And I want to show you one more example too. This one is from May 24th. Notice how when the market opened, we had a pretty strong sell-off. Wasn't as strong as the other ones. We actually had pullbacks in this sell-off, but they still made their way all the way down until eventually they established this consolidation zone where I went short at the top and took it back to the bottom. Now on this occasion, they didn't come back to retest the wick. So I think really me determining whether or not they're coming to test the wicks also depends on how I draw the zone. So do I want to make the top of the zone become do I want the top of the zone to end at the body, or do I want it to end at the wick? So I really think it comes down to discretion as a trader, and it doesn't matter which one you choose. You can either put the zone at the bodies or put it at the wicks, but you just got to trade it accordingly depending on which one you do. So that's the lesson I learned right there from trade one. So let's continue moving on and let's talk about trade two from today. So trade two, I pretty much just kept trading the zone. So I did that on trades 1, 2, and 3. So on trade 2, I shorted as the prices came back into the zone and my break even stop got hit. Now I was thinking about taking profits down here when they got to the bottom of this wick right here from around 9:35 a.m. But I said to myself, look, Ty, if you're in the trade, you short it from the top of the zone, you got to take it when it gets to the bottom of the zone, and that's just what it is. But in this scenario, it came back to stop me out at break even, and you know, sometimes that's how it goes, but you just have to roll with the punches. Now, yesterday, remember how I had a few break even trades, but I violated my break even stop. But today I was a lot more disciplined, and after I took that break even loss at trade 2, I stepped back. I took some time to reevaluate, and that eventually led to me taking trade number 3, because I was like, okay, based on what I'm seeing, I still believe that the zone could hold up. So that was my initial thought on trade 3, but I closed it for a small loss once I saw the higher low that got formed from earlier, because at the same time I'm seeing this higher low, I'm also seeing prices come back and test the top of the range. But I'm like, there was something in my head that said just hold it because it's at the top of the range, it's in a downtrend. But it's also a big rule that's written in big bold capital letters in my trading plan that says do not try and short against higher lows. No matter how appealing it might be, either look to go long or just don't go short at all and just sit on the sidelines and wait for more clarity. So I'm glad I was able to, you know, not give in to my urges of just saying just hold it. Even if I did hold that trade, it would have came back and gave me a little bit of profit. But even though that's the case, that's beside the point. It's always about following your plan and sticking to that discipline no matter what the scenario or what the results may be. You got to be consistent, because one thing about trading is that if you want to really improve, you got to find a way to be consistent with what you do. Because if you continuously switch up your strategy or switch up your game plan, you really don't have an independent variable to judge your performance off of. Because see, if you do it different every time, you don't really know if I did it different this way at work. Does that work all the time, or was it just that one time? But if you do your process the same way every time, no matter what, then you can actually judge whether or not your results are where you want them to be, and you can look at what you want to do to get to where you need to be. So I just think it's important to be consistent. So once I saw that higher low from trade 3, I closed it out and I was like, look, let me, if anything, let me look to go long, even though it felt weird. And that's the thing about it. Sometimes when the trend starts to reverse, that first reversal is going to feel so awkward, because you might be looking at this entire downswing that started from, let's call this 165, and within the span of about, what's that, 1 2 3 4, in the span of 5 minutes, it dropped about 110 points all the way back down to 34,050. So you see that bear trend and you're like, do I really want to go long? But it more so comes down to just reading the price action. When I see that higher low, I recognize my setup and I gotta go long. And that was pretty much my thought process when I came into trade 4. I went long at the support level of the higher low from earlier. And I think that's one of the things that's also important when it comes to trading in the market. You got to stand on your strategy, and you got to trade your strategy no matter what. It might feel awkward, it might feel weird, but if you see everything setting up the same way that you studied it and practiced it, you got to take that trade. Right or wrong, win or loss, you got to take that trade because it aligns with everything you planned out. So that's really the mindset I had going into trade 4. So after trade 4, actually, before we move on, let's talk about our exit on trade 4, because you see I went long right here at the support level from the higher low, and I got out at the top of the zone, which that's a good exit. But I think based on the concept that we talked about earlier when we talked about the wicks and how prices have a tendency to come back and test those wicks that are outside of the zone, it could have been reasonable for me to hold that trade at least until we got back up to the wick right here at point number 3, or the wick right here at point number 1. So just going forward in the future, that's something I can pick up on also. Those wicks above the zone, they can get hit, so you could use that either as an entry point or as an exit point. So let's go ahead and move on to trade number 5. So let's look at the price action that led up to that level. So we see prices have a false breakout to the top of the zone. They immediately get sucked back into the zone, come back down to the bottom, form, I guess, a lower high right here. Notice how the lower high, when you bring it across, it lines up with what used to be support down here from that higher low. And that right there is a very common market concept. What used to be support will usually become resistance once prices break through that level and then come back up to retest it. So when that retest occurs, I'm usually looking to get in, and that's the idea that I had on trade 5. So let's read the notes. I shorted a possible breakout retest, but it's better to catch the short trade on the way down instead of catching it on the way up. And that's exactly what happened at trade 5, because you might have an idea about what you think will happen in the market, but you always want to make sure you get that confirmation. I'm a trader where my stop is very tight. So some traders that have wider stops, they have a luxury of being able to get in where I got in at trade 5, and then maybe they had their stop at the top of the order block right here at the top of the zone, and they would have never got stopped out. Or maybe they had it at the top of this wick right here, they wouldn't have got stopped out. They would have been able to hold that trade and make profit. But because my stop loss is so small, I pretty much have to have the best entries possible based on my strategy. So that really comes down to patience and not necessarily jumping at the first opportunity. You want to see prices come to that level, observe how they react around that level, and then you want to make a decision based on what you see after that reaction. So that's what I learned right there on trade 5. And then when we look at trade 6, I pretty much quickly adapted that mindset that I had from 5 about catching it on the way down instead of the way up, and I actually was able to be successful as prices came back down through my price from trade 5 that I entered at. And also with trade 5, one more thing, let's go back to that. I was also trying to go short based off of this wick right here, because remember how I told you, once support gets broken through, it becomes resistance. But the strength of that support level or resistance level, it really depends on how many touches and interactions that level has had. If you're depending on one singular wick to act as a level of support, then it doesn't mean that it can't happen, but it just means that the probabilities are lower because there haven't been as many traders trading at that level as a stronger level, like the level that might be above from the higher low that we were talking about earlier. Notice how if we were to draw a level of support from this candle right here all the way across until we get to this candle at point number 5, that would be our level of support slash resistance, right? And notice how many touches it will have. It will have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 touches within the span of like 15 minutes, compared to a level where we had 1 touch in the span of 15 minutes. So me trying to go short based off of that wick was just me trying to hop in a little bit too early. And I was also thinking that, if everybody is seeing prices break below the support level, they're probably looking to catch that breakout retest just like me. So let me get in before everybody so I can kind of run the gun and jump in front of them. But in some scenarios that does work, but in this case you want to more so, especially because it's at the beginning of the market when it first opens, it's a lot of volatility, so it's not just going to necessarily turn around exactly at that price that you think, but it will turn around more than likely within that general price area that you're looking at. So that's one of the things I picked up on too from trade number 5. Short from the major levels of resistance or support, not the little small minor levels like this wick right here. So let's move on to our last trade of the day, trade number 7. So after I caught that trade from trade 6, I took it back down to my profit target. We see a high volume candle come in that represents a reversal, and we had a tweezer bottom, which is a very strong reversal pattern as well. And when you combine that with the higher volume, it starts to look very appealing in terms of maybe not a complete trend reversal, but at least a minor pullback back up to the upside. So we see prices spike all the way back up to retest the zone once more, and then they looked like they wanted to continue down, but they formed this higher low right here. So remember what I was talking about from earlier, no matter how strong the trend might be, when I see a higher low start to get formed, I have to either chill out on the short side or start leaning towards that long trade. So once I saw that higher low get formed, I looked to go long at the opening price of that higher low. So I put my order right there. I was able to get hit, and then once that order got filled, I was able to take prices back up to the same swing high that we established on trade number 5. So I think that right there, that's just a textbook example of me being able to identify my trades in the market, identify my setups, and then trade them accordingly and trade them the right way. So I would say that overall today, I think I did a pretty decent job. It wasn't necessarily perfect, but I can say that it was definitely better than yesterday, and that's all I'm trying to do. I'm just trying to get better day by day, trade by trade, and session by session. I think today I was a lot more patient, a lot more disciplined, and a lot more focused on only taking my setups. Out of these 7 trades, let's see, out of these 7 trades, I didn't take any trades that went outside of my trading plan. Even the losses that I took on trades 5 and trades 1, those were in my trading plan. I just didn't necessarily trade the setup the right way because I was a little bit too early. But all of my trades today followed my trading plan, so I'm definitely on the right path. But remember yesterday, on yesterday's trade review, I was talking about not letting my little small losses take away from the good things that I was doing, and I still think that's a factor that I got to consider. Trade 5 and trade 1, they really just hurt me. Now trade 1, that wasn't a loss that I could really prevent based on what I knew up to that point. Now going forward in the future, I can prevent that loss because now I understand that the wicks can also come back and play a major role. So I feel like trade one, that was a loss that I had to take. Trade two, came back to break even. That's acceptable. Trade three, I feel like I made the right decision on that one as well. Trade four, definitely. Now trade five was the only one where I'm like, that just wasn't the right move, because I've had situations where I tried to trade that little small wick before and it didn't work. But today I said, let me just see. Anytime I have that idea about, let me just see if it could work, it's just not the time and place to do it. You can see if things are going to work when you go and you practice on your simulator, when you're back testing and looking at, past charts. But when you're live and you're trading real money, that's not the time to try things out. That's the time to follow your plan and do everything that you already practice and that you already know. So really, that's the goal. Once more, is to just focus on cleaning up those little small trades. When I catch my entries, I know I can do well on them, but it's those losing trades that I gotta manage, and I gotta really just, I guess, I'm not gonna say avoid those, because some trades, some losses, you just gotta take them. But I will more so say avoid the ones that are avoidable. So a normal mistake would be trade one. An unnecessary mistake would be trade five. So I'm really focused on just taking my best trades and not jumping the gun, being more patient. So those are the things that I'm going to be focusing on going into my back testing session tonight. I'm still trying to work out of this drawdown period, but I feel like every day I'm getting closer to being done with drawdown and getting back into profit and doing the things that I should be doing. But it's a continuous process. So I'm working day by day and night by night, and I'm going to get this thing right. So I appreciate you guys for tuning in with me tonight, man. I learned a lot today. I hope you guys did too. I'll be back tomorrow on Thursday, June 29th, 9:30 a.m. sharp. But until then, you guys, take it easy.